So, Joshua and I, it started in the summer up until now. We've been a part of basically a small meeting group with Dr. Wright. I don't know if you remember him, but he came by, I think it was end of last year, and he talked to us about investing, things like dividends and stocks. We've been meeting with him, and we've been learning uh, basically how to invest. And we're here to tell you all a little bit about what we've learned. So, uh, basic stock facts. So, what stocks are they represent divided ownership in a corporation. So, what a company will do is they'll take part of their ownership and make that shares and sell them. Um, and this means that by obtaining one or more of a company's shares, you become almost like a minority owner. All stocks are different. Um, some are different price. Some of them can be high priced and they vary a lot. Some of them are maybe just even $10 and they can stay consistent. And some of them have different qualities in terms of dividend prices and the consistency of their dividend payouts. Stock prices continuously vary. If you watch the market the whole day, you would see it changing close to every second because stock prices are dependent on value. If more people are looking to buy it than people are willing to sell, then the value will rise because there are less uh, supply than demand. And the stock market opens for trading from 9:30 to 4 on weekdays. What to do before buying stocks? The number one thing is understand the two different methods you can approach to gain wealth. Number one being looking for buy low, sell high stocks, and number two, uh, looking to uh, buy a stock to gain dividends and reinvest. And this plays a very big role in what stocks you buy and sell quickly and which stocks you hold on to. Um, a lot of people, when they hear about stocks or investing, they think about a big share like the Dow Jones. But this leads me to my second point, which is do your research. Research, especially using just Google or a site like TD Ameritrade or Yahoo Finance, will allow you to find good small stocks, not necessarily very popular, but one that will allow you to make and bring in a lot of income. You want to know what a company does because that affects how their stock will perform at different points, the consistency of their stock in terms of which prices it was at different points. Recent news because recent news and external factors can always affect the stock. And for pathway number two, which is dividends, you want to look at their dividend payment history. A lot of times, companies' payment for dividends will vary a lot depending on how they're doing. And know the risks. Everyone's at a different point in terms of their investing journey, and different people have different tolerances when it comes to taking risks. So you just got to know what works for you.
Yeah, you got to be comfortable with what you're buying. And that also plays into the research part. If you've done your research, you can be more confident in the stock you're buying and how long you're keeping it.
Hmm. Yeah. Looking for money making stocks. Research is maybe the biggest part of investing. Let your research play a large role in the stocks you buy, with history being an especially big part. Knowing how a stock has done in the past is a big indicator for you in terms of whether you should buy it or not because it gives you a window into seeing how it's going to do in the future. Build your own portfolio. This doesn't necessarily mean that popular stocks that are doing well or that uh, you can do well with, you shouldn't shy away from them. But don't let another person's money decisions directly influence yours. Uh, this means that you should be not necessarily be unique, but know what works for you. And this also plays back into taking risks and knowing risks. Diversify your portfolio. It's a really good idea to have not necessarily even, but do what works for you, but a healthy balance in terms of the stocks you have. You can have a few for dividends and a few for value, because what having the balance is having value stocks in terms of buy low, sell high. You can sell high and then you can take that money and put back into dividends. And then lastly, understand the market. If you invest in stocks for dividend payments, it's important to keep tabs on how much stocks pay each period, because typically when stocks pay dividends, which is normally every 3 months, so every quarter of a year, sometimes when the stock goes up in value, they lower their dividend price, and that's time to let go. And when the stock goes down, they raise their dividend price to make it more enticing and to bring in interest.
This goes up back into the research part. Like if you look at graphs, some stocks may pay more in dividends per share when this even when the stock goes down. And that's why you want your portfolio to be well balanced, because dividends don't really matter when they go up or down, because when they go down, a lot of them will pay you a higher dividend yield, while just having stocks to go up in value can be risky because when they go down, you might lose money.
Hmm. And understanding the market also means understanding what can affect the market in terms of different factors like tariffs on importing oil and things like that, and
And you
tax.
you also want to think about the future, like what companies are going to be like really useful. Like you want your tech companies, your renewable energy companies, and things like that. That's where you do your research, because companies that are sort of like more industrialized won't be as successful in the future as say like a renewable energy company,
Mhm.
which where the US is trying to be more dependent on renewable energy.
The benefits of investing in stocks. Well, firstly, buying stocks in terms of short term or now, it allows you to put money into a company and especially for value, potentially make that back and more. It will allow you to increase your wealth and to grow your assets. The research component, which we've been talking about a lot because it's very important, it allows you to get a better understanding of the economy. Look back on when I was talking about possible tariffs on oil, maybe refinery companies won't do so well. And that's a big no no. It tells you which stocks you can and can't buy at certain times. And investing stocks opens the door to accumulate generational wealth, especially via dividends. Dividends, especially when you reinvest in the stocks, so you take the dividends you get and you use that to buy more of the stock. It will allow you to get more and more each period, which will allow you to build wealth for your kids, your grandkids, and your great grandkids.
And buying and selling stocks can be like a career, or it can be a side hustle in a way. Like you can use whatever money you're paid in your job to constantly reinvest in dividends and build another stream of income.
Hmm. And dividends was also something Dr. Wright has talked to us about because he's told us he prefers that over value stocks because it's slow money, but it's a consistent buildup. And if you reinvest, you get more and more each time. And if the markets struggle, you'll be fine. Important terms to know. Um, does anybody have any confusion when it comes to these terms? I can explain. Me, Joshua, and I can explain anyone.
I have a question.
Mm-hmm.
Can you like give me a definition of a dividend?
Of a what?
Of a dividend?
Okay. A dividend. So let's say a stock is a $10 stock, right? And
Mm-hmm.
their dividend price is 22 cents a share. That means if you pay for one $10 stock from that company, every 3 months they'll pay you 22 cents. So the dividend is a payment made to shareholders by the company or the
Can you
corporation.
repeat that again? It's a payment. What?
It's a payment made to shareholders, so the people that own the stock by the corporations.
Okay, thank you.
Okay, so me and Josh can just run through some of these terms. An annual report is basically what it sounds like. It's a report describing how the stock did in the past year. A bear market is a market where stocks are consistently losing value. And bull markets are the exact opposite, where they're gaining value. A market is very simple. It's a place where stocks are sold. A stockbroker is someone who sells and buys stocks for you. A bid is the amount of the amount someone is willing to pay for a certain stock. A dividend, as I just explained, it's the amount paid to shareholders by corporations for owning the stock. Day trading can either be a job or a side hustle, as Joshua mentioned. It's buying stocks at the beginning of the day, selling it at the end of the day before the close, and taking the profits. An exchange is similar to a market. A sector is just like businesses and industries in real life, but in stocks, a stock comes into a sector. Um, it's how stocks are organized because different stocks are in different industries. Like Joshua
So
was
like,
talking about how there's the tech sector, there's they're all different kinds of industries.
yeah, so like companies like Apple and Microsoft might be in one sector together because they're tech companies.
Mhm. And yield is similar to dividend. Yield is the percent of the total price of a stock that's paid out in dividends. Volume is what volume is. It's the volume is the Josh, you remember?
Volume is kind of confusing.
Volume is like the amount of the amount of the stock in terms of its value. I believe. Thus, I have to reference. I have to.
Is it like how much of the stock is there?
Yeah, yes, yeah. That's what it is.
Okay.
Volume is like the amount of stocks sold at a certain period, like during the day. The volume would be how much stocks are bought during that time. A stock symbol is how you reference the stock at different points. Like in terms of, let's say the Tesla stock, the stock symbol for that is TSLA. So wherever you go, you can look and you can find TSLA, the Tesla stock, using that symbol. Volatility is the tendency of a stock to become extreme in terms of its price, whether going up or going down. Like if a stock is $10 and it goes up to 15 during the day, goes up down to 5 during the day, and finishes back at 10, you can say it's really volatile because it gained about 33% value. It lost like 66% and it settled back at where it started. And a portfolio is basically where all your stocks are stored. Let's say you have a company where you're trading stocks with a company like Robinhood or TD Ameritrade. Your portfolio would be there because you bought all your stocks on that platform. Open floor, time for any questions or comments.
Okay. Why is like dividends, I guess, more safer than stocks?
Dividends are safer than stocks because stock value, obviously you can do your research and you can predict outcomes, but stock value, even when you gain your money, you sell, you take the profits, it's sitting there. Dividends are, Dr. Wright prefers dividends because they're slow money, but it keeps rolling, it's consistent.
and dividend stocks don't value doesn't mean as much because you can actually get paid more because the value of the stock went down.
Hmm.
So it's not as much of a risk as a value stock where you're trying to make get it go high just to sell it.
Okay, so would you consider like a stock a short-term investment compared to a dividend as a long-term investment?
Yeah, you could
Yeah.
say.
Okay.
Would you really do? Would you really do that? Because if it's a value stock, it might go up quickly,
Mm,
uh, and it may not go up quickly. And the same thing with a dividend; it might just be paying you over time. So I know that writers talked about buying dividends and then just letting it sit there and collect money for a long, long time. And there's other times that he talks about a initial investment that might be low, and then you just keep watching it go up and go up and go up, also as a kind of long term.
Yeah, and I think that's where the diversified portfolio comes into play, because different stocks can be kept for different reasons. Um, and research, I think I agree with you. I think different stocks like dividends you can hold for a long time, and I mean value stocks you can also hold for a long time too, in terms of being in a sector that's going to be really prevalent in the future or really popular. And I think having that diversified portfolio is important too.
So Richard, the point there is, let's not tie the value stocks or the dividend stocks to a time period. Just think about what your investment strategy is, like George and Josh were saying in the beginning. You know, if you're looking to uh, buy low and sell high, then that's going to be your strategy, regardless of the time period. On the other hand, if you're looking to collect dividends, then you can do that either for a short period of time or a longer period of time, depending on what you're trying to achieve.
Hmm.
Okay, yeah, makes sense. Because I know that, like, I know some stocks, like some people, like they keep for a very, very long time, and the value only tends to go up. Uh, so yeah.
I learned about options.
Oh, okay. So options are like contracts almost. So you can purchase an option, and options pay back uh depending on the stock price at the end of the contract in a way, if that makes sense.
It's
So
kind of risky.
options are, if the stock, it's basically a prediction in a way, a calculated gamble, if you will. Like you could purchase an option, saying the stock will go down. If it goes down, um you make money back. If it doesn't, you basically purchased it and you didn't get anything back. So they're risky, especially for new investors, but it's an interesting concept.
So it's basically predicting the revenue or the outcome of that stock,
Yeah, and
either
that's what
from
research is
now to
really
like
for.
the next 5 years.
Not the next 5 years. They're short
It's
term,
yeah,
like
it's almost like a weekly
like like like
Oh,
maybe
it's a weekly thing.
Friday come end of Monday.
yeah.
You
Oh,
think more
okay.
day traders do options?
Yeah, a lot of them do. So in terms of the research aspect, you can go to somebody give me a random stock.
That's
You could go to someone like Tesla, and this is Yahoo Finance. You can research without an account for the most part. You can go to something like well, first you could look at CX dividend date, forward dividend and yield. They don't have any
They
dividends.
don't have any.
So this tells you, okay, if I'm buying this, it's strictly for value. You could go to the chart and you could see different things like it's priced at certain points. You could go 6 months, and these candlesticks, they look complicated, but they're an easy concept to grasp. So the lines at the end of the candlesticks show the high and the low for the certain day. And if it's green, the closing price will be the top. If it's red, the closing price will be the bottom. So you can see this day, what was that, February 23rd? You can see it was really volatile at that point. But a day like, I don't know, like here, December 4th, the stock didn't change a lot in terms of its price. And
um
it'll show you how high it went on certain days. Like in the past 6 months, this is really where it reached its peak, and this is where it was lowest.
I know we're talking about Tesla, but like for dividend stocks, you really want to look at this chart, like maybe look months or years back because div if the stock went, if you see that the stock went down, they may pay a higher dividend or they may pay you more in dividend in your share because the stock went down, or they may not. That's why you want to look like even like 2 years back and look at a pattern and see what they did when it went down and what they did when it went up.
And a site like TD Ameritrade is better for that.
I have a question. Is it like the same type of concept as for cryptocurrency?
Yeah, almost. Like you could even look at a sort of cryptocurrency here, Dogecoin, and it will show you the exact same thing. Oh, it was 69 cents last night. It'll show you the like the history just in general, especially if you go long term, like a 5-year graph or 6-year graph or graph or something. It'll show you basically all the information you need. All right. Anybody have any more questions?
Do you think media plays a bigger part than sometimes the company?
Yeah, I think so. I think definitely. Um, Especially for value. A lot of external factors, including media, in terms of get this stock or get this stock, influence a lot of people, and that's plays into another big part, which was what we mentioned before, which was build your own portfolio, let your own research speak for itself.
If you built enough capital, you think you would do options, or you think it's still too risky?
Um, I think if I got to a certain knowledge point or a certain understanding when it comes to investing, I think I would. Hmm, would.
Any other questions?
Hmm. And for options, I think value also plays a large role because value and volume in terms of how many people bought the stock means a lot of people want it. That could show an upward trend, or value if it's shown a consistent trend of going down at a certain point, to stay away.
And this is why you also like you don't just want to look at the stock, you want to read up on the news of the company, like what's currently going on, how are how are they in terms of like world events, like if the president wants to do something, will their company be involved in it? Will it be a major loss for their company? Stuff like that.
And you can see a lot of those news on
Yeah.
sites like Yahoo Finance, especially.
Um, is there any like I guess apps you would recommend when looking at like one trying to like study the trends and stuff like that?
I think TD Ameritrade is really good, especially for dividends, in terms of reading up on the history and seeing the graphs on the history. Uh, I think Yahoo's also a good one. These two are really the main ones people use, but they're really good. They use them for a reason.
Well, George, I hate to break this. We're going to be going to our break rooms in a minute,
Okay.
but that's and we can ask more questions in the break room.